Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for October 31st, 2021. If you guys are celebrating the Halloween holiday, hope you guys have a great time with your family, friends, loved ones, and enjoy the spooky night. You know, for those of you that don't celebrate Halloween, hope you're having a great weekend. All right, we've actually got a lot to talk about this week. We have really important pieces of data that are coming out. We have A, the FOMC, B, we have a jobs report. But there's more data than just that this week. There's plenty more data, but those are the big things that are happening this week. So we're going to talk about that. We're going to talk about actually at the end of the week, we saw some dollar buying come in for the end of month, which, you know, put the dollar in a very precarious place because we're not too far from actually breaking out to the upside. So the dollar could be at risk of an upside breakout this week, but we're going to talk about that and more, But before I do that, I need to mention, if you haven't tried out ForexAnalytix, it's only $1 for 10 days. Try it out. It's really, you know, not only is it a great app. Let me get over to here to what you get with your $1 for 10 days. You get the app, you get all the analysis, you get all the live private webinars that we do for the ForexAnalytix community, but also we have a huge, probably one of the premier, if not the best, trading chat rooms around, especially for FX and macro, and you know, a lot of people that like to follow commodities and also equities as well. Make sure you jump in the chat room. Try it out. It's only $1 for 10 days. Even if you decide to go with the light version, that's only $19 a month versus $120 a month for the premium version. You decide to go for the light version. Well, the light version, you still get the mobile app. You still get the basic analysis. You get the macro analysis. And then you also get all the private webinars that we do. This particular webinar, as I prepare for you for this next week, is not going to be as long as they normally are. The reason why is because it's Halloween night and I have to give candies out to kids that should be coming to my house anytime now. So therefore, if you like this video, make sure you give us a thumbs up. That says thank you to our team for working around the weekend and getting this video out to you. But also make sure you subscribe to the channel so this way you don't miss any of our analysis throughout the course of the week. Because I'll see you on the F.A.C.E webinar on Monday. I'll have a much better and broader piece of analysis for you guys going into this next week to see how the market is reacting because let's get over to it. What you're going to notice with the dollar, let's go over to the dollar index. Dollar index came and hit what I consider pretty key resistance on Friday. Now, if you just take this lower trend line here and match it up to the highs here, we have what you'll notice as a bull flag pattern. Now, you know, going back to Friday and seeing the price action on Friday, it was following a weaker dollar because of a stronger euro after the ECB. The ECB rate decision that just wasn't as dovish as the market was hoping for. So the euro rallied. As a result, the dollar index sold off. We got a rally back on Friday, and that established the parameters for a bull flag pattern. Now, one of the unique things that I think about the dollar index is this break below this 38% retracement of the September lows to the September highs. That 38% retracement, we got a false breakdown below it. We actually got a false breakdown below the spike high from April 1st. The reason why that's significant in my view is because I think a lot of traders got short the dollar on Thursday, expecting dollar weakness for the end of month. A lot of banks, when I say banks, not central banks, I'm talking about like, Goldman, Citi, a lot of the end of month estimates were that we were going to see some continued dollar selling. So you probably got some traders chasing the dollar lower at the end of the week. Then on Friday, the dollar turned around and went higher. And so that false breakdown and that expectation of a weaker dollar didn't come to fruition, which sets up the dollar for a rally this week under a couple of conditions. So what are those conditions? Well, really is twofold, right? We have the FOMC on Wednesday. So the FOMC on Wednesday, most analysts are expecting the Fed to start tapering the middle of November, 15 billion every month till we wrap up the all these emergency programs, right? So it's 10 billion of treasury purchases, I think 5 billion of mortgage-backed securities. That's where the calculations of 15 billion comes in from. But the question is, does the Fed taper even more? We have persistently high inflation here in the US, and we are seeing it not be so transitory globally. So the Fed's probably asking themselves, do we clamp down on inflation and risk slowing down the economy, or do we let the economy continue to run a little hotter, but also let inflation run a little hotter? That's really the question that is being asked on Wednesday. Now, if the Fed decides to be a little bit more aggressive and maybe they taper more than 15 billion a month, then you have the basis of the dollar really rallying and breaking above this key resistance, which is the 38% retracement of the post-COVID highs spike. I'm sorry, I should rephrase that. Post-COVID lockdown highs way back here in early 2020 to the lows. We're at the 38% retracement, which comes in at 97 or 94.70. So 94.70, it's also the spike low in March. So if that level is breached, that is going to be a very bullish outlook for the dollar index near term. I didn't mean to move that. I'll move that over. So, I mean, you can talk about a target, which is going to take us back up towards 96 on the dollar index. Now, the other thing that we have to look forward to is actually on Friday, we have the jobs report, right? So the jobs report, if you remember last month, we had a miss in the headline number. I think we created 194,000 jobs, but the market was expecting like 500,000 or maybe 600,000. So the headline number missed. Unemployment rate came down more than expected, which is good. But how about if we see a bounce back, because the market's expecting us to create 400,000 jobs this month? How about if we create more than 400,000 jobs this month? How about if we create 500,000 jobs this month? And how about if those price pressures are still persistent? And how about if unemployment continues to stay low? Then what happens there? Well, not only do we get a potential bullish breakout following the FOMC on a more hawkish Fed, but then a strong jobs report could really put the dollar much higher by the end of the week. Now, the other risk is, and you could take the other side of that argument, and you can say, well, maybe the Fed's just going to come in as expectations, and maybe the jobs report continues to be weak, and we see two back-to-back misses in the headline number for the jobs report. That's entirely possible as well, and that means this flag is probably still going to be developing. What I'd be watching for this week specifically is, well, two things. Three things. Okay, three things. So the first thing would be, let's make sure this dollar index does not break below 93.20, maybe 93. We start breaking back below 93.20, which is the 50% retracement here. You're probably going to see a little deeper retracement in the dollar. The other two things we need to be watching for, A, is Friday's highs. Let's just say roughly around 94.30, and then above that at 94.70. If we break through 94.70, I think the last place that you're going to want to be is short the dollar. Now, I've talked a lot about the dollar. I wanted to show you the euro. Obviously, we had a big rejection in the euro dollar at 117. I know myself and other traders were shorting the euro above 116.50. I got short at 116.75. I was going to short some more if we got to 117. We just never got there. It was a big trendline resistance, previous support acting as current resistance. That's previous lows back here in March. I didn't make as much as I should have. I didn't think the euro was going to sell off down to almost 115.30 on Friday. I had zero expectations of that big of a move, but it did happen. And I think the problem that you saw on Thursday, Friday is so many traders were prepared for dollar weakness because many banks' end of month estimates were expecting dollar selling at the end of the month. And what we got is we got dollar buying. So, that does put at risk, in my opinion, the euro of possibly breaking through 115 and seeing, 114.20, maybe down to 113.40 on a dollar breakout. So if you guys are short the dollar, be mindful of the big reversal we saw on Friday. Be mindful of some of these key levels of resistance coming up. Now, like I said, that's not the only thing that's happening this week. We have the RBA rate decision. That's going to be Monday night or Tuesday morning. I still think the Aussie is capped at the 200-day moving average. If we see a break back below the 74.40, and if you listen to the Morning Edge webinar, which is a private webinar for ForexAnalytix subscribers only, but if you're a normal listener of that, you guys know that every day of the week, I think I wrote down, and this is something we draft every day together as a group. We have put up 0.7440 as support this last week. I think every day this week, if I'm not mistaken. You all know that I've been watching that level like a hawk, because if we do break back below that in the Aussie dollar, I think the risk is we get back towards channel support, which is going to be somewhere down here at the 73.20, 73.30 level. So that's something that I personally have been watching. And with the RBA on Monday night, Tuesday morning if you're in Australia, Monday night if you're in North America, late Monday night, early Tuesday morning if you're in Europe, that's something you're going to be watching for. A couple other things we have for this week. And by the way, if you guys love these videos, make sure you give us a thumbs up. It is Halloween tonight. We want to make sure our team is doing this for you, getting this out so you can watch it on the 31st of October. So make sure you give us a thumbs up, and make sure you subscribe to the channel so you don't miss any of the analysis that we do. A couple other things. We have ISM data, services PMI that's coming out. We have the ADP data, which is the private jobs data that comes out on Wednesday. We also have the Bank of England Bank of England rate decision on Thursday, which is another big possible mover. I'll cover that actually on the F.A.C.E webinar on Monday. We'll talk a little bit more about that. That's coming up on Thursday. Then obviously we have Canadian jobs alongside U.S. jobs on Friday. All right, so a lot of things happening this week. And, I want to say, guys and gals, please listen to the F.A.C.E webinar. It's every day and it's free. It's not just me. It's the ForexAnalytix team. We're talking about events that are happening that day, what to look for, what to look out for, the key technical levels. It's free. Come listen in every day of the week. It starts at, what time does it start at? It starts at 8:30 a.m. Eastern every day. Come join in. And we have great interviews. Dale Pinkert tries to do an interview a day. He brought in Danny Blanchflower on Friday that used to be at the Bank of England from 2006 to 2009, I think, if I'm not mistaken, or was it 2016 to 2019? It's bad when you're skipping decades now. Anyway, Danny Blanchflower was on Friday. We have a lot of great interviews, so make sure you join in. My name is Blake. Thank you for spending your time with me. I hope you guys are having a great weekend, and I'll catch you Monday morning on the F.A.C.E webinar. Happy Halloween. We'll see you guys later. Bye-bye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.